Hi everyone, this is Jadev from Property Framework, and today's episode is essentially a recap of 2023, and then the second part of it is the forecast for 2024. What is going to happen in 2024, and what will happen with the property market? So, in 2023, the main topic, which has been the topic of conversation everywhere, is the interest rates. So interest rates have increased from 3.35% to 4.35% in 2023. There were five interest rate rises. And the reason why interest rates had to rise because inflation was not under control. Inflation was well above the target range of 2 to 3%, and that was why the RBA had to further tighten the interest rates. So now we are at a position where the interest rates are at 4.35%. So despite the interest rate rises, while there were forecasts that the property market might not do too well, we did see that most capital cities performed fairly well during this time. So let's get into how the property market behaved. So during the first half of the year, there was a lot of negative sentiment in the media. The media was expecting prices to fall in 2023, but despite that, the property market performed fairly well. Now let's look at the breakdown of the capital cities and regional areas and how they performed over the year. So you can see here the past 12 months growth. The best performing cities have been clearly Perth, Adelaide, and Brisbane. Perth recording 15.2 percentage growth, Adelaide recording 8.8 percentage growth, and Brisbane recording 13.1 percentage growth for the year. Sydney did record about 11.1 percentage growth, but as you can see, the Sydney market has been slowing down towards the latter part of the year. This growth was mainly coming from the first part of 2023. And towards the latter part of the year, you can see that the growth is slowing down. It's 0.8% in Sydney over the past 3 months, and over the past month is 0.2%. Whereas for the smaller capital cities, Perth, Adelaide, and Brisbane are seeing consistent growth throughout the year, and they would continue to grow well into 2024 as well. In the regional areas, we're seeing that markets in regional Western Australia, regional Queensland, and regional Victoria, regional Western Australia, regional South Australia, and regional Queensland perform really well. They've recorded growth close to 10%, and the growth has been steady throughout the year. Regional Victoria and regional NSW, as you can see from here, has not been doing well for the entire year. Regional Tasmania too has recorded poor growth. So from here, the smaller capital cities seem to have done really well. Sydney and Melbourne have done fairly decently, but the growth in Sydney has been slowing down towards the end of the year. If you look at the rental market, so this is for houses. The rental market also performed really strongly throughout the year. Perth recorded a 12.9 percentage increase in rents, Melbourne 11.3, Sydney 9.2, Adelaide 7.3, and Brisbane 6.7. So there has been steady pressure in the rental market, mainly due to a shortage of the rental stock, and this meant that rents were always rising in all these capital cities. So, a decent year in terms of property prices, and a very good year for the rents, as rents have been continuing to increase, and the increase in rents would have helped investors offset some of the increased mortgage repayments that came through the interest rate rises. So one of the biggest things that we've been observing throughout the year is that the stock on market nationwide has been consistently very low. So you can see this graph here where the dotted line represents the 5-year average for the stock on market. So this is nationwide all throughout Australia. The red line represents the 2022 year and the dark blue line represents 2023. So you can see 2023 is a fair bit under the 5-year average. So the stock on market has been at least about 20% lower than the 5-year average. And this is one of the reasons why property prices kept on rising in different markets despite the interest rate rises. It's because of these lower stock levels. Now let's dive into individual markets and see where the stocks have reduced significantly. So that this table on the right here is showing the listings change throughout for the entire year. As you can see, Brisbane, Adelaide, and Perth are the three markets where stock has significantly reduced since 2022. So in Perth, there's 26.9% lesser stock available. So what this means is that, to give you some context, if there were 100 properties available for sale in 2022, in 2023 there's only 75 properties available for sale. And in Adelaide, it's reduced by 7.4%, Brisbane 18.3%. So this correlates with the property price performance in the three cities. We saw that these three cities were the best performing property markets for the year. And you can see the reason for that is the very low stock on market, which has reduced. Sydney has recorded a slight increase in stock since 2022, whereas Melbourne has increased a um, fairly significant increase of 7.9%. Hobart and Canberra, there's a flood of new stock here, and that's why those markets haven't really been performing too well. So that's the summary of the listings. And let's have a quick look at the dwelling approvals now. The dwelling approvals, the light blue line is the dwelling approvals throughout Australia. And while there was a slight peak here uh, during that COVID phase, there was a slight peak. You can see that it's trending down steadily, and right now it's way below the 10-year average. So the number of new properties that are going to come into the market is pretty low because the dwelling approvals is just trending down. The other issue is that the construction industry has been facing quite a few challenges. There's been a shortage of stock, shortage of labor, the construction materials have increased, and homes are not getting completed as fast as they once used to. So, due to that, the number of homes that are coming on the market are also much lower. Okay, so what this means is that moving forward, the number of new properties is not going to flood the market. It's going to be a very slow entry into the market. And that means the supply is restricted generally throughout Australia. And it will impact certain markets much more significantly than other markets. And the markets which will impact significantly will definitely have price growth for the coming years ahead. Now, looking at 2024, one of the major things that would happen is the tax cuts that have been proposed towards the middle of the year. Now, to give you a quick overview of these tax cuts, what this means is that you will get back more money. So, if you were in the tax bracket between 45,000 and 120,000, previously you were paying 32.5% in tax. 120 to 180,000, you were paying 37% in tax. Now, what's going to change is that between 45,000 to 200,000, that entire bracket, you're only going to pay 30% in tax. So that's a reduction in your tax that you would be paying. And that means your borrowing capacity will improve and people will have more money to spend. And that would have some impact on the property market. So that's number one. Number two, the interest rates. Now, the forecast is that inflation would come under control at some points, mainly perhaps during the latter part of the year, and most of the major banks have forecasted some relief towards the latter part of the year. There might be some tax interest rate cuts towards the end of 2024. So with the interest rates cuts, lending restrictions might ease a bit more, borrowing capacities might improve, consumer confidence will increase, and that will again play a part in the property market. Of course, it will affect some locations more significantly than the others. Number three, migration. Now, there have been record levels of migration into Australia, overseas migration into Australia. As of 2023 June, about 500,000 people have come into Australia, and most of these people are temporary visa holders or students. There's also been people who've come in as skilled workers, other Australian residents who have come back into the country, and also New Zealand residents. But the big portion is the temporary visa holder and the students. Now, these people are directly going to impact the rental market because they are not going to buy property; they're going to rent. They're going to rent property, And therefore that's going to further worsen the rental crisis. There's going to be a shortage of rental stock and rents will continue increasing. Looking at the property market forecast for this year, Perth would continue to do well in 2024 because it has a lack of stock and there's continuous demand from owner occupiers, first home buyers, and also the investors from the East Coast. If you look at markets like Brisbane and Adelaide, they would still record positive price growth in 2024 because of the lack of stock. Sydney, on the other hand, would not have an exceptional year. Growth would be fairly moderate, and I don't expect a lot of growth in 2024 in Sydney. Melbourne is an interesting one. Melbourne is one of the only capital city that didn't really have too much of growth over the last 3 years, and even during 2023 did not do too very well. We can see that rents are starting to rise in Melbourne, and Melbourne has to do a bit of catching up. And therefore, while Melbourne is not there yet, it hasn't really gained any momentum. I expect Melbourne to start picking up in the latter part of 2024 or early 2025. Okay, so that's it for the capital city markets. For the regional city markets, the markets in central Queensland and northern Queensland are going to do exceptionally well. I won't be surprised if they record double digit capital growth for the year 2024. Regional markets in South Australia and Western Australia will also continue performing fairly well. Okay, so that is the forecast for the property market. So if you're an investor with a budget of under 500k, then you would do very well in some of the regional markets, like regional Queensland, for example, central Queensland, northern Queensland. These are the markets that you could get into and have really good capital growth over the next 2 to 3 years. If you have a slightly higher budget, 500 to 600k, then you could maybe consider Perth. But just take note that Perth is a very, very heated market at the moment, and you'll have to be very careful of not overpaying in this market. So, those are the forecasts from me. I hope you found it useful, and I'll see you soon.